Hello everyone, welcome to the 32nd episode of me learning how to trade using Forex. So in the previous episode, I think we finished off reading on the FXCM websites, learning course I guess over there, and we've only started trying to look at how to read the Forbes What is Forex Trading I guess lesson on here. So yeah, let's get started. So what is Forex trading? Editorial note: Forbes Advisory may earn a commission on sales made from the partner links on this page, but that doesn't affect our editor's opinion or evaluations. We offer information about investing and saving, but we do not offer any personal advice or recommendations. If you aren't sure whether investing is right for you or which investments are right for you, please consult an authorized financial advisor. Okay, so table of contents. What is Forex? Open all hours. Why is Forex traded? How does Forex work? How currencies are traded? Ways to trade Forex. Forex jargon. Maximizing opportunities. How do I trade? Cool. Foreign exchange trading, commonly referred to as Forex or FX trading, is a practice of exchanging one currency for another in the hope of profiting from the changes in exchange rates. In the UK, Forex trading is a legal regulated activity overseen by the Financial Conduct Authority, which is the regulatory body for financial services in the UK. So, /FX trading is the practice of exchanging one currency for another in the hope of profiting from changes in exchange rates. At a basic level, Brits who exchange pounds for a foreign currency at a bureau d'exchange, bank, post office or travel agent before heading off on holiday abroad are carrying out Forex transactions. Forex traders do a similar thing but on a grander scale. The march of technology means it is also a market that offers opportunities for those with the right aptitude to private investors and traders. Here's a closer look at Forex and the key points to bear in mind. So what is Forex trading? Forex trading involves the speculative buying and selling of currencies in quest of profit. Involves buying and selling of speculative buying and selling of currencies in order I guess to quest for profit. It can also be used to hedge existing currency bets against the backdrop of exchange rate fluctuations. Hedging is where you protect a financial position against the potential of making a loss. This is useful. So it can also be used to hedge existing currency bets against bets against a backdrop of exchange rate fluctuations. And the hedging, let's say hedge is where you protect a financial position against the potential of making a loss. Converting a few £100s of holiday spending money might not seem like a big deal to any of us individually, But FX is not only the largest market in the world, it was also the most actively traded. The numbers are eye-popping. According to the latest triennial 3-year report from the Bank for International Settlements, global forex trading stood at $6.6 trillion daily in 2019. To put such a sum in context, the amount is more than double the UK's annual gross domestic product, the measure of the sum total of a country's entire goods and services. GDP, the measure of the sum total of a country's entire goods and services. GDP, what's that? Gross domestic product. Gross domestic product, which is the measure of the sum total of a country's entire goods and services, right? Yeah. Open all hours. Individual stock exchanges such as those in London, Frankfurt and Hong Kong each work to specific opening hours and are therefore stop-start in nature. In contrast, Forex is an all-round-the-clock market with 4 main trading hubs working across different time zones: London, New York, Tokyo and Sydney. When trading has stopped in one location, the Forex market will continue to operate in another. Forex is also traded in Zurich, Frankfurt, Hong Kong, Singapore and Paris. Unlike the holiday maker who needs foreign notes and coins to pay for a cocktail by the pool, Forex traders aren't necessarily looking to take physical delivery of the currencies. Most Forex trading takes place between institutional traders working on behalf of individuals, banks and other financial organizations, and multinational companies. Before the internet, only institutions and wealthy individuals could play the Forex market. Times have moved on, however, and private investors now make up a small part of the Forex market. So, 4 main trading hubs across different time zones. London, New York, Tokyo and Sydney. Alright, okay, so why is Forex traded? Forex is carried out for a number of reasons. For example, to hedge against international currency and interest rate risk. Forex is carried out for a number of reasons. To hedge against international currency and interest rate risk. This is topical at the moment, as world economies grapple with inflation concerns and where interest rate levels have come under particular scrutiny. Forex is also used to speculate on the impact of geopolitical events such as the increase in tension between Russia and West over Ukraine. Political events and natural disasters have the potential to alter the strength of a country's currency significantly, leading to potential trading gains or losses. Companies make use of Forex as well. For example, a multinational headquartered in one location might use the Forex market to hedge currency risk resulting from transactions carried out by subsidiaries around the world. Forex is also a means of providing diversification within investment portfolio. Because the Forex market is open 24 hours a day, 5 days a week, it provides traders with the opportunity to react to news that might not impact a particular country's stock exchange till much later. Economic indicators used to analyze Forex market include Interest rates, inflation rates, a country's balance of payments and its economic policies, a government's attitude towards intervention in currency market. So, economic indicators used to analyze the Forex market include interest rates, inflation rates, a country's balance of payments and its economic policies, a country's balance of payments and its economic policies, a government's attitude towards intervention in currency markets. Government's attitude towards intervention in currency markets. Forex trading takes place over the counter, which means there's no physical exchange of the underlying currency. So Forex trading place over the counter, meaning there's no physical exchange of the underlying currency. A global network of banks and other financial institutions effectively oversee the market instead. In the past, those without the necessary means of trade Forex directly may have used a broker to trade currencies on their behalf, but thanks to advances in technology, the evolution of smartphones and the plethora of online trading platforms, it's now possible to trade currencies directly as an individual. Note, whether you should consider Forex trading depends on your financial circumstances as well as your market knowledge and appetite for risk. As with any market-based speculative venture, there's always the possibility that trades can go against you and that you lose money as a result. Yep. How does Forex work? The main aim of Forex trading is to predict if the value of one currency will increase or decrease relative to another. Forex trading is to predict if the value of one currency will rise, or increase, or decrease relative to another. Right, a trader might buy a currency thinking its value increase with the aim of selling it as a profit. This is known as a going long. A trader might buy in currency thinking its value increase and it's the aim of selling it as a profit. So that's selling it, going long. Trader buying the currency thinking its value will increase with the aim of selling it at a profit. Going short. Or a trader might sell a currency today on the basis it could decrease in value tomorrow and subsequently be bought back at a cheaper rate. This is known as going short. So, trader selling the currency today on the basis, not on the basis, thinking its value will decrease tomorrow, with the aim of buying it back at a cheaper rate. How currencies are traded. Each of the world's currencies has a 3-letter code. Yep, these are similar to the symbols used on stock exchanges to identify a particular company, such as DGE for Diageo on the London markets. Right, the most traded currency worldwide is the US dollar. Worldwide is the USD, which has the ticker USD. The second most popular is the euro, followed by the Japanese yen. The second most popular is EUR, followed by JPY. Third is JPY. And then GBP. AUD, Australian dollar, Canadian dollar, CAD, Swiss franc, CHF, and New Zealand dollar, NZD. There are more than 170 currencies in all worldwide. In Forex, currencies are always traded as currency pairs. This is because when you buy one currency, you simultaneously sell the other. So, in Forex, currencies are always traded as currency pairs. When you buy one currency, you simultaneously sell the other. The following currency pairs are known as the majors and account for about 3/4 of all trading in the Forex markets. The following pairs are known as the majors. So EUR USD, USD JPY, GBP USD, AUD USD, USD CAD, USD CHF, and ZD USD. So I think USD is in all of them. Minors are all the other combinations of the world's biggest currencies, such as GBP, EUR. So without the USD, basically. Each currency pair comprises of 2 elements. The first is a base currency. So, I think, is it safe to say major pairs have all got USD in them? I think it's safe to say. So, major currency pairs may all contain USD. Minor currency pairs combination of world's biggest currency. Okay. Each currency pair comprises 2 elements. The first is a base currency. When listed in the trading quote, this part is always equal to 1. Always equal to 1 when listed in a trading quote. The second element is the quote currency. For example, consider the currency pair EURGBP GBP EUR equals 1.19. The base currency is pound sterling and the quote currency is euros. This pairing means that the £1 is worth 1.19 euros if you decide to buy. Put another way, it would cost 1.19 euros to buy £1. When you buy a currency pair, the price you pay is called the ask, and when you sell, it's called the bid. Right, okay, so GBP slash EUR equals 1.19. So base currency equals GBP quote currency equals EUR. £1 equals 1.19. I don't think I even have the euro sign on my thing, but what is a euro sign? Okay, never mind. 1.19 euros. Or if buying, it will cost it'll cost 1.19 euros to buy £1. When you buy a currency pair, no, that's right. When buying currency pair, the price you pay is called the ask. Is the ask, and the price, and when you sell, it's called a bid. And actually, let's make a new line on this. When buying currency pair, the price you pay is ask. When selling currency pair, the price you sell is the bid. When you sell is the bid. I think it should be the price you receive is the bid, isn't it? So the price you receive is the bid. You pay is called the pay. Okay, so ways to trade Forex. There are three main ways to trade Forex at scale: spot market, forward market, futures markets. Okay, so 3 ways to trade Forex. There are 3 main ways. Yep, spot market, which is this is the main Forex market where currency pairs are swapped and exchange rates are evaluated in real time based on supply and demand. Main Forex market where currency pairs are swapped and exchanged, and exchange rates are evaluated in real time based on supply and demand. Forward market. This is where Forex traders enter into binding contracts with each other, locking into a particular exchange rate for an agreed amount of currency on a future date. Traders enter into Forex traders enter into binding contracts with each other. Locking into a particular exchange rate for an agreed amount of currency at a future date. Futures market. In contrast to the Forex and spot markets, this is where traders take out a standard contract on a dedicated exchange to buy or sell a pre-agreed amount of currency at a specific exchange rate on the date in the future. So in contrast to the Forex and spot markets, this is where traders take out a standard contract on a dedicated exchange to buy or sell a pre-agreed amount of currency at a specific exchange rate on a specific day, right? On a date in the future, on a date in the future. Is it pre-agreed like that? Okay, that works. On a date in the future. Cool. So this is where I enter binding contracts, lock into it for an agreed amount of currency at a future date. Pre-agreed amount, change rate in the future. Dedicated exchange to buy or sell pre-agreed amount of currency, agreed amount at a specific exchange rate. Oh, so this one isn't specific then, basically, the forward market. Right, okay. The date isn't specific on this one, I don't think. So the difference between the Forex, the forward and futures. Future has to be a specific exchange rate. Whereas this one doesn't say specific exchange rate. Oh no, particular exchange rate for an agreed amount of currency at a future date. Oh, this one doesn't have an exact date, right? On a future date or on a date in the future. Oh, I don't know. These two sounds forward and futures. I wonder, because I made notes on this before. Remember, forward and futures. What was it? Forward. 3 ways Forex market is traded. Forward. Oh, that's yesterday. Transaction that settles for a date later than spot is considered a forward. A forward can be for any amount of money and can settle on any date that's not a weekend or holiday. A future is non-negotiable. Right, okay. Transaction settled date is later because this price is calculated adjusting spot rate to account for the difference in the interest rate between two currencies. They aren't a forecast of how the spot market will trade at the date in the future. A forward can be for any amount of money, can settle on any date that's not a weekend or holiday. on any date. Right, okay. Whereas this one is a set date. Right, I see. So a future has a set date, whereas a forward doesn't really have a set date. Right, okay. Forex jargon. Currency pair. In addition to the majors and minors noted above, the exotics involve pairs that include less traded currencies, such as the Mexican peso. Yep. So I've written that down, I think. Major currency. Exotic. Exotic currency pairs involves less traded currency. Mexican peso. Bid-ask spread. This is the difference between the buying price and the selling price of a currency pair. Bid-ask price. Spread. Difference between the buying and selling price of a currency pair. A high spread means a big difference between bid and ask price. The spread is measured in pips. High spread means a big difference between the ask and bid price, right? Between the bid and ask price. The spread is measured in pips. Pips. A pip in Forex is usually a one-digit movement in the fourth decimal place of a currency pair. It's usually a one-digit movement in the fourth decimal place of a currency pair. So if GBPUR moves from 1.19261 to 1.19371, then it has moved by a single pip. Because to get from 6 to 7, then it's 1. A price movement at the fifth decimal place in the Forex trading is known as the pipette. What's our pipette? P-I-double-T, okay. Only 1p? Yep, alright, so that should be in. A pip is usually a one-digit movement in the fifth decimal place of a currency pair. Fifth, right? Fifth, yep. A key exception to the pip rule is when the Japanese yen is the quote currency. Except when JPY is the quote currency. And quote is the one on the right, isn't it? Because base is the one on the left. Yep. In this case, a pip is calculated the one-digit move in the second number after the decimal point. So, in this case, a pip is calculated as a one-digit move in the second number. It's calculated as a one-digit move in the second number after the decimal point. If USD/JPY alters from 110.05 to 110.02, this is a 3 pip move, because 2 plus 3 is 5, or 5 minus 3 is 2. Leverage, another term for borrowing money, enabling trade. Oh, that's a good term actually. Think of it as borrowing money. Enabling traders to play the Forex market for larger amounts of money than they themselves will be willing or able to put up. Margin, the deposit required to use leverage of your trades. To use leverage with your trades. Maximizing opportunities. Another jargon term for FX is another jargon term in FX is lots. Even a 50 pip move won't earn an FX trader very much if he/she is working in the 100 or 500 units of currency. That's why most FX traders buy and sell currencies in lots, batches of currencies that enable to take advantage of relatively small price moves. So, a standard lot is equivalent to trading 100,000 units of currency. Lot. The lot is equivalent of trading 100,000 units of currency. Buying one lot of EUR/USD means buying 100,000 euros for their value in US dollars. So buying one lot of EUR/USD means buying 100,000 euros for their value in USD. Buying one lot of EUR/USD means buy 100,000. Right, okay. Because a lot is 100,000. Right. This is where traders use leverage to avoid having to tie up all their capital in the trading position. With leverage, you only have to put up a fraction, the margin of your position's full value to open a trade. Leverage trading is risky, however, because losses can be magnified until they exceed the initial amount borrowed. Lots can also come in micro and mini batches. Micro equals 1,000 lots. Mini is equal 10,000. Yeah, 10,000, right? That is 10,000. Yep. Okay. How do I trade? You can choose from a number of online platforms run by Forex brokers as well as several trading apps. Make sure your provider is regulated by the UK's financial watchdog, the Financial Conduct Authority. Funds should be held in a segregated account so that if your broker goes bankrupt, your money will be safe. So, make sure to choose an online platform which is regulated by the UK's financial by the financial conduct authority. Funds should be held in a segregated account. Segregated account. So that if your broker goes bankrupt, your money will be safe. Having a clear idea about the sorts of trade you might want to do and find out how much it's going to cost with the platform or app provider of your choice. The more obscure the trade currency pair, the wider the spread is likely to be to execute a trade. So, obscure the currency pair, the wider the spread is likely to be to execute a trade. And remember, widespread is not good. Some of the most popular platforms are forums where you can speak to other users. If you're a completely novice trader, look out for providers that offer online tutorials or the option to practice trades on demonstration accounts with virtual money, aka demo accounts. As the FX markets is one that never sleeps except on the weekend, 24-hour support from a platform provider is extremely useful. Some services will allow you to automatically open and close positions once certain levels of trading have been reached, ensuring your account is not on the receiving end of a nasty surprise. To have the chance of making a return, it's essential to research your chosen currencies. For example, you will need to know in advance the dates when countries make public their key economic announcements concerning GDP figures, balance of payments, inflation rates, and so on. Equity markets, right. So I need to whoops, what did I just do? Don't do that. Essential to research the chosen currency. Need to know in advance the dates when countries make the key economic announcements concerning GDP figures, balance of payments, inflation rates, selling, make the public. Equity markets, interest rates, and important news developments also have a role to play in determining currency strengths or weakness. Equity markets, that's the stock markets, interest rates, and important, SEI, and important news development also have a role to play in a currency's strength or weakness. Cool, that's all done from this page. What is Forex trading? It's a good time to wrap up as well. So I think next video we're gonna go through more of the, I guess, the learning section on the Forbes Advisor website and make some more notes regarding everything. So yeah, thank you guys for watching, and I'll see you in the next video. Bye!